Hi there, in this video we explain why CIS subcontractor verification failures happen and how UK contractors can correct mismatched HMRC records properly.
Picture this. It's 4 p.m. on a Friday. Your site program's incredibly tight, the weekly wages are due, and one of your most trusted subbies, someone you absolutely need back on site first thing Monday morning, is understandably demanding their money. But when your admin team runs the routine HMRC verification, it fails. Just like that. Suddenly, you're legally forced to withhold 30% of their cash, and you just know it's going to cause an absolute nightmare for your relationship with them. Sound familiar? Well, you're not alone. Welcome to this explainer. It's been prepared specifically for you, the UK director of a construction limited company, by the expert tax advisors at Atlas Tax Advisors, or ATA, a UK accounting firm that helps businesses understand tax compliance and HMRC regulations. Today, we're diving into our CIS verification failures, resolving mismatched subcontractor records in the UK 2026-27 guide. We're going to look closely at the new HMRC landscape and exactly how you can resolve these frustrating verification failures without losing your subbies or your sanity.
I know you're busy running sites and managing teams, so we're keeping this incredibly structured. We're going to cover 1. The verification failure problem. 2. Why subcontractor records actually mismatch. 3. The intense 2026 HMRC enforcement. 4. How to resolve these mismatched records. 5. Correcting your monthly return. And finally, 6. Protecting your construction business.
All right, let's jump straight into Section 1, the verification failure problem, and the very real panic of a 30% unmatched deduction.
So, when a verification fails, HMRC's system automatically treats that subcontractor as unmatched. This legally triggers a penalizing 30% deduction rate from their labor payment, instead of the standard 20% or the 0% gross payment status they might normally have. Obviously, this is a massive hit to your subbie's cash flow, and it's exactly the kind of thing that halts work on a Friday afternoon. So why does so many routine verifications fail? Honestly, I hear this from construction directors all the time. A lot of people assume a failed verification means the subcontractor is a fraud or they're tangled up in some massive legal dispute with HMRC. But the reality? Almost always, it's just a strict data matching issue. Nothing more.
That brings us nicely to Section 2, why subcontractor records mismatch, and exactly what HMRC expects to see.
Think of the HMRC verification gateway as a remarkably rigid digital bouncer. It requires an absolute, exact match of specific identifiers to the tax records it holds on file. If your busy site managers or your admin team are rushing the onboarding process, well, that's exactly where things break down. Let me give you a scenario that brilliantly illustrates the most common trap. Say you're working with a sole trader. On their invoice, or maybe via a quick WhatsApp message from the site, they tell you they're JS Brickwork. So you plug that trading name into your software. Makes sense, right? But HMRC's database only knows this individual by their legal self-assessment name, John Smith. The system sees two entirely different names, assumes they're different entities, and boom, the verification instantly fails. A lot of people overlook this detail, but it's a critical one.
The data requirements are incredibly specific depending on the legal entity you're dealing with. For a sole trader, you absolutely must have their exact legal name, their 10-digit UTR, and their national insurance number. If you're paying a limited company, you need the registered name, the company registration number, and the company UTR. Now, a really common error here is missing a regional prefix, like SC for a Scottish incorporated firm. Just missing those two letters will cause a failure. And for a partnership, you need the trading name, the partnership UTR, and the nominated partner's details. The classic textbook mistake here is your admin team accidentally inputting an individual partner's personal UTR instead of the partnership's unique UTR.
Which leads us to Section 3. The 2026 HMRC enforcement, focusing on the strict new rules and penalties for 2026/27. In April 2026, the game completely changed for the UK construction industry. HMRC rolled out a staggering $1.7 billion investment to heavily police supply chains. So we are no longer just talking about fixing a few admin typos. We are talking about surviving severe, real-time enforcement and managing massive financial risk. Let's say you skip the formal verification because you're in a rush to get a job done, and you pay a subcontractor $50,000 gross. If HMRC audits you later and determines that subbie should have actually been on a 20% standard deduction, HMRC isn't going to chase the subcontractor for that money. They will assess you, the contractor, for the unremitted tax. That is $10,000 straight out of your pocket, and that's entirely excluding the additional penalties and interest they'll tack on. This is something many taxpayers first discover when HMRC is already knocking at their door. But honestly, that £10,000 bill might literally be the least of your worries when you look at these devastating new 2026 powers. HMRC can now immediately withdraw your gross payment status if they even suspect fraud in your supply chain. They've also introduced an objective should-have-known test, meaning ignorance is absolutely no defense if a subby further down your chain is dodging tax. If HMRC thinks you should have known what was happening, you're on the hook. And perhaps most frighteningly for you as a construction boss, they can now transfer the 30% civil penalty directly onto you, creating personal liability for company directors. It's a whole new world of risk.
And what happens if you actually lose your gross payment status under these new fraud rules? You get hit with a 5-year GPS ban. Prior to 2026, it was just a 1-year ban, which, a strong, healthy business could maybe absorb. But 5 years? Having 20% or 30% deducted from every single payment you receive from your contractors for half a decade? For most UK construction firms, that is a fast track to insolvency.
Okay, deep breath. Let's look at how to fix this in Section 4, resolving mismatched CIS records and treating verification purely as a data cleaning exercise.
Because the stakes are now just so high, your entire internal mindset has to change. When a verification fails, stop thinking of it as a terrifying tax dispute. Instead, use this exact 3-step process to treat it systematically. Step 1. Pause the payment. Do not let that cash leave your bank account no matter how much the subby is shouting. Step 2. Compare the records. Get the subby on the phone or email and demand their official HMRC paperwork so you can validate their exact legal name, their UTR, and their correct entity type. Finally, Step 3. Correct the data in your accounting software and re-verify it in the portal. It's really that simple. Stop, check, fix.
And here's a professional tip straight from the advisors at ATA. Never, ever use a temporary national insurance number starting with TN or just 2 digits. HMRC's gateway is hardwired to systematically reject it. Catching small, easily overlooked details like this before you run the Friday payroll prevents you from being forced into applying that 30% unmatched deduction rate.
Let's move to Section 5, correcting your monthly return and handling mistakes on the CIS 300.
So, what happens if a mistake slips through, a payment goes out, and an incorrect deduction is actually made or reported on your monthly CIS 300 return? This is a situation many directors first discover when they're frantically trying to reconcile their ledgers at month end. Well, the rules here are incredibly strict. If you find the error before you submit the CIS 300 to HMRC, you're fine. You are allowed to make a direct internal adjustment and simply refund the subby any over-deducted cash out of the next payment. But if you find the error after submission, that's a different story. You must file a complete replacement return. And crucially, and a lot of people get this wrong, under HMRC guidance, you are strictly prohibited from directly refunding the subby out of your own pocket. The subcontractor is legally required to reclaim that overpayment directly from HMRC via their own self-assessment or payroll offsets. Your hands are tied.
Also, did you know? As of 6 April 2026, there is no such thing as a quiet month in construction tax. If you have a month where you make absolutely no subcontractor payments, you still must file a nil CIS 300 return. If you just ignore it, assuming you don't need to file because no money moved, an automatic £100 late filing penalty will immediately land on your doormat. Every single month requires a filing, 0 payments or not.
Let's wrap things up with Section 6, protecting your construction business and building robust, compliant defenses. Remember, HMRC is no longer just checking your math. They are forensically looking at your internal processes. You need to build an absolute fortress of compliance around your site operations. So here are the proactive defenses every UK director needs to implement today. First, stop accepting casual text messages for onboarding. Use a standardized, written form every single time. Second, validate exact HMRC identifiers before a single penny is paid. Third, run monthly bank ledger reconciliations to catch mapping errors in your software before they're filed. Fourth, ensure your invoices clearly split labor and materials, because incorrectly applying deductions to materials is a massive compliance breach. And finally, run background checks on corporate directors in your supply chain to protect yourself against that brutal should-have-known fraud test.
To quickly summarize what we've covered today, treat CIS verification entirely as a rigid data matching exercise. Always act, verify, and correct your data before the payment actually goes out the door. And above all, deeply respect the new 2026/27 penalties. The catastrophic loss of your gross payment status or getting hit with a personal director penalty is just never worth the risk of a rushed Friday afternoon payment. It's just not.
So, I'll leave you with this final thought. Are you 100% confident your subcontractor supply chain will survive an HMRC should-have-known audit today? Honestly, if HMRC walked through your site office door right now, could your software and your onboarding paperwork decisively prove that you did everything right?
If your answer is no, or even if you're just sitting there thinking, I'm really not sure, it is time to act. Contact Atlas Tax Advisors, or ATA, today for expert, personalized advice tailored specifically to your construction firm. They know exactly how to bulletproof your systems against these strict new rules. Please remember, this explainer provides general guidance only, and you should always obtain professional advice before making any financial decisions. Thanks so much for joining me on this deep dive, and I will catch you in the next explainer.